a free webinar today on home ownership for newcomers to Canada. So it'll be led up by Iryna. She is a licensed mortgage agent with the Mortgage Coach, and myself, licensed real estate agent with EXP Realty. So we're going to be giving you guys some tips and tricks on how to set you up for success. The market is uh, one of a kind these days, a market like we've never seen before. But with it being so competitive, does not mean that you cannot achieve
Okay,
success.
so welcome everyone. Thank you so much for joining us this afternoon. And today I'm going to talk about home ownership for newcomers to Canada from the financial perspective. I'm going to cover what is new to Canada program, qualification for this program. I will touch base on the down payment, plus we'll go through the example of the down payment calculation. And also I talk about mortgage default insurance, non-resident speculation tax, application process for the mortgage, and how to build and improve your credit history. Let's move on. So who is considered,
Iryna,
yes,
sorry, we have one question that just came in,
sure.
and it says, how do you calculate the down payment? But I think you're going to touch on that.
Yes, we are going to touch on this, and we are going to have an example of calculation as well.
Perfect.
So who is considered a newcomer? Newcomer is someone who is relocated to Canada within the last 5 years. So usually for mortgage qualification, the following will be taken into consideration. First of all, your credit score, then your income, including assets and liabilities. For example, a car payment or credit card payments, also the down payment that you are going to provide, and lender will look at the property as well, something like location. And properties located in large cities where it's easier for lender to sell the property in case they need to do foreclosure, in case you default on your mortgage, you're not able to pay your mortgage, so lender will need to sell the property. So in those areas like large cities, properties are more preferred by lenders. It's easier to get approval for them. In rural areas, it may be more restrictions or less lenders are willing to provide the financing. So who knows what minimum down payment is required for the house price of 1 million? Please put your answers in the chat. If you know
So
how
if you
much,
guys are,
yeah, so if you
go
know
ahead.
how much down payment is required, 5-20%, the minimum, what's the minimum? So 5%, right? Anything more?
Okay, we're
5%, we
getting
have,
some good answers here.
yeah, we have 20%. Okay, good guess.
I
So
haven't
let's,
seen any correct ones yet.
no, 5% is actually the right one.
On the first
Yeah,
500, right? Right.
oh, yeah. So what is the mortgage qualification? So first of all, the documentation that will be taken into consideration is your permanent residence or valid work permit. So when you have these documents, you already can apply for your mortgage. In terms of income qualification, it is required to have an employment at least for 3 months past the probation period. So this should be a full-time job with the employee, so with the company. So you need to be employee, self-employed is not considered for this program. And those transferred under a corporate relocation program are exempt from those 3 months probation period, which is a good thing. Now regarding the credit check. So how New to Canada program is different from other programs is usually in Canada, you need to build your credit history to have a credit score where lenders will assess your ability to borrow money and to pay back those money. For new to Canada, it's possible to use either International Credit Bureau report if you have it in your country, and not all countries have this credit bureau and systems similar to as we have here in Canada. I know that in US, UK, and Australia they have similar systems. So if you come from those countries, it's possible to use in your credit report from your country. But for New to Canada program, it's possible to use alternative credit confirmation from two sources. First is the rent that you're paying, and the second one is bills that you pay for hydro, for your phone, for example. Now the confirmation will also depend on the down payment. So if you put 5% down payment, you will need to provide 12 months of alternative credit confirmation. If you put 10% down payment, you can provide either letter of reference from a recognized financial institution from your bank, or 6 months of alternative credit source. And I think I said we had some questions, right?
Yeah, I was just answering them in the chat. So someone had asked, so is the 3 months plus the probationary period?
No, it should be 3 months past the probation period. So if, for example, you have 6 months probation period at your company, it should be past the probation period, because lender wants to see that you already passed this phase, so you have a stable income. And also, it is like a safety measure for yourself as well, because you need to be able to make those payments. You need to have a job. Do you have any other questions?
Oh, that's it for now.
That's it. Okay. Okay, so let's go through some example of how this 5% is calculated. So if you're buying the owner-occupied property where you plan to live, and the property value is less than 1 million, let's see how the down payment is calculated. So, for example, Kathy and Tom, they're new to Canada, and they would like to buy a house for 800,000. So the minimum down payment required will be calculated as 5% from the first 500,000. In this case, it's 25,000, and 10% from the remaining amount up to 1 million. So in this case, it's 30,000. So the total amount they need to provide is 55,000. And of course, don't forget about the closing costs. Lender would like to see that you have around 1.5% from the value of the house on your account. And closing costs include legal expenses, land transfer tax, moving costs. After the webinar, I'll provide you with the brochure with the details of the closing costs. It's called cost of homeownership. So you'll be able to see all the details regarding those closing costs. Are there any questions regarding the down payment calculation? So who knows how much down payment do you need to provide if you buy a house more than 1 million? Of course, if you have the enough funds as a newcomer to buy this house. Yeah.
See, 20%. Someone said 20%.
Okay.
Any other
Yeah,
guesses?
you're right, Pavel. It's 20% indeed. Okay, let's talk about mortgage default insurance. So when you put down payment for the house which is less than 1 million in price, and if your down payment is less than 20%, in Canada, you need to get a mortgage default insurance. So this insurance provides, like secures the lender that if something happens, you're not able to pay your mortgage, they will be able to get the money back. So in Canada, we have three organizations for mortgage default insurance: Sagen, previously Genworth Canada, CMHC, and Canada Guarantee. Mortgage insurance premium is non-refundable and it can be added to your mortgage. And it depends on the down payment that you provide. So more down payment you put, less insurance you need to pay. And of course, if you have 20% down payment, there is no insurance required.
I have a question. So is the insurance part of the closing costs that you mentioned in the previous slide?
No, this is not a part of the closing cost. This is like an additional payment, but it will be added to your mortgage. So you don't need to have those money on your account. You don't need to have cash to pay for the mortgage default insurance. This amount can be added to your mortgage, so you pay it gradually with the mortgage. But if you have available funds, if you want to pay it on closing, it's possible to do so as well.
What does the closing cost include?
So closing costs include legal fees, they include land transfer tax. So when you buy a house in Canada, you need to pay land transfer tax. It's also calculated depending on the price of the house. And also moving costs involved. There may be an appraisal involved that you need to pay. Some lenders pay for the appraisal, so depending on the lender. But you will receive the brochure with the link to the recording of this webinar. And there are the details of all the closing costs.
Thank you.
You're welcome. Okay, so let's look at the example of the calculation of the house with the mortgage default insurance. Anne and Andrew, new immigrants, would like to buy a house for 500,000. They put down payment 5%. In this case, it's 25,000. And for the remaining amount, they need to pay mortgage default insurance 4% because of their down payment of 5%. So the total mortgage amount will be 4,094,000. So they don't have extra cash to pay for the mortgage default insurance, so it was added to the total mortgage amount. So for the 5 years fixed and 25 years amortization, they will pay around 2,000 per month. For the mortgage where you put less than 20% down payment and mortgage default insurance required, the maximum amortization you can get is 25 years. And if you put more than 20%, if there is no mortgage default insurance required, your amortization can be higher, can be 30. Some lenders offer 35 years. And what it helps you to do, it brings your monthly payment down. In total, you will pay a little bit more in interest because you have more years to pay out your mortgage, but your monthly payment will be less. And also the mortgage where there is an insurance coverage is called insured mortgage. And it has the best interest rates just because it's more safe for the lender. And looks like we have another question, right?
Yep. So the question is it advisable to pay more down payment in terms of a lower interest?
So you get less interest if you have an insured mortgage, and it can be up to 20%. So if your down payment is less than 20%, 5%, 10%, 15%, so less than 20%, your mortgage is insured because you will need to pay for mortgage default insurance. And in this case, you will get the lowest interest rates.
I have a question. So you did mention this program is for newcomers. How
Right.
is it different from other people? I mean, is it, I mean, does it have an advantage in comparison to others, or actually like it's more restricted than others? And if you are newcomers, do you have to go with that program, or can you go just with the regular program for mortgages?
Mhm. So the difference in this program is that when you come to Canada, you don't have an established credit history yet. So it takes around 2 years to build your credit history, to get a good credit score. And this program allows you to buy a house if you have less than that, less than 2 years credit history. So the earliest it can be after 6 months in Canada, for example, if you have 10% down payment. So I'll touch base on the credit history at the end, but the better credit score you have, the better rates you will get. So credit history is an important factor to consider. Um, did I answer your question?
Question was like, how is that program is different from other mortgage program? I mean, does it have any advantage or not?
So this is, yeah, so basically, I told you that you can get a mortgage faster. So after 6 months in Canada, you can get a mortgage. For other programs, you need to have a built credit history, and it can be 2 years plus.
Okay, so if you go for other programs, you would not be able like actually like to get into those programs if you were in Canada for less than 2 years?
Yes,
Okay.
yeah, because you need to build your credit history.
What if like you were living, for example, in the US for some time before, and doesn't this count into the credit history?
Yeah, so in US, they also use a similar system like Equifax and TransUnion to calculate your credit score. So when you come from US, we can use International Bureau Credit Report. So we can definitely use it as a confirmation of your credit score. Yeah, that's a good question. Okay,
And
so
then,
Thank you.
Iryna, we had another question saying, could you compare some ballpark interest rate if 5%, if the, I guess 5% down payment versus 19% down payment? Just curious.
yeah, so basically when I work with my clients, if they want to see the difference, I do the detailed calculation for them. For example, if they put 5% down payment, 20% down payment, how it will change in terms of the monthly payments. So please feel free to reach out to me, and I can do the calculation for you to compare the numbers.
Okay, so that's a more of an individual person by person
Yeah, for sure,
scenario.
for sure, yeah.
And then someone said they missed the earlier part. So what is this program called?
So we are talking about the program. It's called Newcomer, New to Canada program for newcomers to Canada. Okay, let's move on. Okay, the other thing I wanted to talk about is non-resident speculation tax. So if you came to Canada and you don't have permanent residency yet, you need to consider a non-resident speculation tax. This tax depends on the area where you buy, and it's 15% on the purchase. So if you see here, Toronto, Hamilton, like it's pretty far to the north as well. So if you don't have permanent residency yet and you want to buy a property in this area, you will need to pay 15%. But if you receive permanent residency status within 4 years of the date of the purchase, you can receive a rebate for this amount. So this is something for you to consider. Any questions about this? Okay. And you can find more information when you follow this link. There are all the details about this. Okay. So about the process for the mortgage approval. So the first step usually is the meeting or Zoom communication or phone conversation with a mortgage specialist like me, for example. So I usually go through the details of your future plans, what you'd like to do, your income situation, and what down payment you have available, the sources of the down payment. And after that, it's more clear for me what documentation needs to be provided and what product can suit your needs. After, the next steps is to fill out the mortgage application, and it can be done online on my website, where you can see here, apply now, blue button. So you can click on the button and it will prompt some questions you need to answer, plus the consent for the credit check. When I receive your application and all the required documents, I work on the file and I work on the approval for your file. Do we have any questions?
We do have one question saying, will you send this presentation along with your contact details?
Yeah, for sure. We will send the link to the presentation, contact information as well. So if you have any questions after, we can definitely communicate.
And then we have another question saying, I have a friend list a property in Oakville, has bidding war. He received 63 offers on the property, listed for $670,000 and sold for $972,000. How banks and mortgage companies do with such cases regarding the appraisal.
Wow.
So I'll touch on this quickly and then I'll let Iryna. But you know what? The thing is, this is happening quite often in this market. A lot of times people will bid 100 or even sometimes $200,000 over the asking price. And then when the conditions are being fulfilled, or even if it's firm and they go back to the lender, the bank is not giving a mortgage for that full amount. So that's why the bank will do the appraisal. So the bank will only give a mortgage to a certain amount of the appraised value of the home. Anything beyond that, the homeowner purchasing the property would be responsible to cover that difference. So if the bank is, for example, this happened yesterday with the deal, the house was listed for $550. The person put in an offer for $620 and it got accepted. However, the bank was only giving a mortgage for, let's say, up to the $600 amount. So that extra $20,000, the homeowner would have to either supply that themselves or they would choose not to purchase the property. So sometimes that complicates things, especially if you've put in a deposit. then if that deal's firm, you do risk losing that deposit. So you do want to make sure you're in good communication with your real estate agent as well as your mortgage broker to make sure that that is all in line.
Yes, for sure. This is a great topic nowadays, because lender, they will not give you the money based on the price you pay, but based on the appraisal done by the qualified appraiser. And usually lenders, they have a list of appraisers that can be used. So there's definitely something to consider. So if you're going to bid on the offer, you need to have available funds. And also in terms of the down payment for newcomers to Canada, 5% should be from own resources. And other, more than that, more than 5%, and can be gifted from immediate family member. So if you have some relatives who would like to give you some money, maybe back home, they can use it as well. So in this case, a gift letter will be provided by your relatives saying that the money are non-returnable, and the lender would like to see money on your account within 15 to 30 days before closing. So the earlier you have them on your account, the better.
Okay, we have another question that came in.
Yeah.
So with regards to paying, in regards to paying down payment, do you know if there are any restrictions in Canada from the government about bringing money in Canada from back home after they have landed? So I think Iryna just touched on that. So basically, you can have family gift you funds that does need to be declared, or if you are bringing funds from a different country that are your own funds, but there may be just in investments or stocks or something like that, that can be used, but the proper disclosures do need to be made. So that's when you would talk to your mortgage broker specifically, because there are actually some countries that are a bit more difficult to bring money over from than other countries. So it'd be great to touch base with Iryna just on your personal basis, and we can get you more information on that.
Yeah, another professionals is also you want to talk about is tax accountant. Just because when you're established here in Canada, and if you decide to sell your property, like after living in Canada for some time, for example, you will need to include this into your income. So it will be taxed. So you can talk to tax accountant regarding the details as well. So to agree to answer your question, what's the difference between mortgage broker and directly going to the bank? So when you go to the bank, you basically work with one bank only and with their products that they provide. As a mortgage agent, I work with different lenders. So I also work with large bank like Scotiabank and TD Bank. I also work with insurance companies, with monolines. Those are the organizations that work only with mortgages. Also credit unions and private lenders. So basically, mortgage agent is like a one-stop shop where you have a different range of products. And if you can't receive a mortgage at the bank, for example, you don't have enough income or you have some problems with your credit score, we have a solution like B lender, for example, alternative lender, where the interest rate may be a little bit higher, but you'll be able to get the mortgage. I also tell that mortgage agent is like your best friend because
My best friend too.
yeah, because we not just give you money, like help you to get money. We also provide advice based on your future goals, how to improve your credit score, what type of mortgage will suit you better. So customer service is totally different. I know that in big banks, they also have something like change of their staff pretty often. So if you speak to one person and when you do your mortgage renewal in a couple of years, it may be a totally different person. So it's also convenient to work with mortgage agent.
We have some more questions coming in. So, how
Yeah.
much tax is charged in such a case, bringing money from India to Canada?
So when you sell your property, so once you live in Canada, you established like you started a job, you rent an apartment, and once you bring money, you will need to include this into your income. And there are different tax brackets, depends on your income. So it's better to talk to the professional, like to accountant, so they can advise you.
Yeah, a tax accountant would be able to give you the exact idea of how much you would be taxed, because depending on how much money it is, the more money it is, the higher the tax rate that you're charged. So they would be able to get you more information on that. If you do need a connection with a tax accountant, let us know and we can connect you with one.
For sure.
Another question is a recent municipal assessment pretty close to the appraisal assessment? I'll
Um,
touch on that.
yeah,
Sorry, go ahead.
yeah, I wanted to say that I don't think it's close because, first of all, a different lender has list of different requirements, what they want to get assessed. So it may be different. I don't think this is close and this can be accurate.
And also to touch on the municipal assessments, usually they're getting the value to rebuild the home and they're not getting the actual market value of the home. So when the appraiser goes and does an assessment, they will do the actual market value of the home for that particular home, the cost, the conditions, the criteria, all the benefits of that home and that location that it's in. So they'll be able to give you a market value. The municipal assessment, that's what they use in regards to, for instance, if the home were to burn down, this is how much it would cost for labor and materials to rebuild that home. So that will always be lower than what the actual value of the home is. Sorry, I have to sneeze.
Bless you, Tori.
Thank you. But yeah, so the municipal assessment will always be lower than what the actual value, the market value of the home is.
Okay. And I can see another question. Who pay for mortgage broker? So my services as a mortgage agent is free for my clients. I get a commission from the lender for bringing in the clients, unless you have a really bad situation with your income, with your credit score, and you need to go to the private lender. In this case, you will need to pay for a fee for my services as well.
Okay,
Okay.
another question. Do you expect the prices of houses to increase or decrease in the coming period? This year, for example, with COVID. So I'll touch on that. So at this point, I highly doubt that the home prices will decrease. At this point, home prices are still, they're at early, towards the end of last year, they were rising drastically. And the beginning of this year, they're still rising, but they're not rising as fast. So a lot of real estate professionals online and different brokerages have predicted that the home prices in general will continue to increase a little bit more, and then it'll kind of plateau. So then those prices that have increased, that will remain the norm for a time being. Another contributing factor as well is the mortgage rates and the interest rates. Sorry, they've said that those are going to be same for I think the next year. Adina.
Yeah, so they told for at least till 2023. But again, it's hard to predict with a situation like this with pandemic. But the more stable situation in the country, it brings more investments, and it means the interest rate in this case may go up. This is another like large topic to discuss about the interest rate. Okay, I have one more slide in my presentation, and this is regarding the credit history. So credit history is an important thing to build when you land in Canada, because it will help you to borrow money. And the better credit score you have, better interest rate you'll be able to get. And credit history shows the lenders your ability to borrow money and pay them back. So I have some tips in terms of the building and improving your credit history. First of all, you need to pay invoices, your bills in time. If you can do it, maybe pay a little bit earlier so that there is enough time for bank to process the payment. Also, never miss a payment. If you have some withdrawals, automatic withdrawals set up, make sure you have enough funds on your account. And if you're not able to make a payment on your credit card, make a minimum payment, but make this payment, don't miss it at all. So lenders will look at your ability to pay bills in time, but also on your credit utilization. So let's say if you have a credit card with a credit limit of 1,000 and you spend 800 every month. So your utilization is 80%. It's pretty high. So lenders would like to see credit utilization around 30%. So this is ideal. So if you can increase your credit card limit or maybe have another one credit card to spread the amount, it will help. And the longer you have your credit history, the better. So when you have a chance to get a credit card, when you land in Canada, start it as early as possible. And variety in credit is also good. Like for example, if you have a credit card and then you bought a car, you have car loan payment, or if you get a line of credit, for example, it will also help. Are there any questions regarding this one?
Does it help if you actually like put direct payment for your bills from your credit card? Is that a good option like to do?
Well, the main idea for you is to pay your credit card on time. A direct payment is it just may be more convenient for you, so you don't forget about the payment. But as soon as you pay them on time and you don't miss the payment, it's fine.
Yeah, so having that activity on your credit is good having that activity, but as soon as the payment goes on it, you have to make sure you're paying it back to the credit card as well.
What if you are not using your credit card that much? Is that bad for your credit history?
It's better to use your credit card. It will definitely help you. It's like I can't say it's bad, but it's better to use your credit card.
Mm-hmm.
So there is
Okay, thank
activity
you.
going on.
Because yeah, with lenders, they want to be able to see that you're able to be responsible with money. So if you have the credit card and you have it available, but you're not using it, then that's telling them they still don't know how you would use the money responsibly. So they want to see that you're able to make transactions and pay it off within a reasonable amount of time.